Hi everyone, welcome back to another video. In this video, we're going to be looking at two ETFs that I'm watching closely as we're currently going through a market downturn, as you all know. One of the main ETFs that I am keeping an eye on, IAUM, which is through BlackRock. It is the Gold iShares Trust. What this is you are buying into gold, and as we know, gold has continued to skyrocket. Year to date, we are already up, look at that, 29.25%, and we can actually see as we go to the beginning of the year where we're sitting at 26.38. It has continued to go up. Now, I want to say that gold is an excellent investment to buy because it has actually been performing better than any other asset, even Bitcoin. And we're going to look at that in just a moment. In 1 year, this has already skyrocketed at 46.14%. And if we look at the max time frame, it's already been 93.51%. So we can see this was listed back on June 29, 2021, and it was $17.62. We can see gold hasn't been doing too much as we went through 2022 and even into 2023, but it has really skyrocketed. Basically, I would say about February 16th, 2024, and has continued to go up ever since. So basically about a year of experience with this ETF continuing to rise. Now we can see what the lows and the highs were for the 52-week, and it has not really changed much. A lot of other things to keep in mind for this is that right now we are averaging around 40.60%. It's actually not bad, and then since inception is about 14.0% on your money, growing quite nicely. Now let's actually go look at the S&P 500 because this is always a good benchmark to look at any asset class, and year to date we are actually negative 13.19%. And if we go look at the Bitcoin ETF, we can pull that up through BlackRock. So this is the ETF through BlackRock, and we can see so far it has already gained just today 2.85%. This recording is actually during the market open, so that's why I wanted to record it. Now year to date, look at that. It has actually underperformed gold. What I was telling you before is gold has significantly outperformed Bitcoin at the moment. And if we look at 1 year, it was only at 31.79%. If we look at the max time frame, obviously it's a little different than gold because this was just listed last year on January 11th, 2024 for 27.94, and now we're sitting at 49.64. So if we go back to gold, right, remember, let's just look at this one more time. Year to date was negative, basically 10%. Let's just round it off versus gold. And if we look at year to date, it is up 29.32%. So that's something I like to look at always. Here is another interesting fact that I'm going to pull up for you right now about gold. All right, so this is off of Apple's app here on Mac. And what I wanted to show you is look at the price of gold. We are sitting at a record $3,432.10, and that price is going to continue to fluctuate. In the past year, it has performed 29.08%, so very similar to that ETF. It's tracking it very closely. We can see 1 year it's up 49.16%. Now, if we look even like at the 10-year, right, we can actually see the price actually hadn't been doing much. We can see the price has continued to steadily increase. And if we look at all time, right, so this was since the very back, we can look back all the way to 2000, basically at the start of this millennia, and we can notice that 2000 was basically the price of the lowest amount of gold, which was actually sitting at $270.10, and it has continued to increase. So we had some spikes. Remember our Great Recession here in 2008, it was still rising, so it was about 972, right, and then it kind of decreased just a bit in some of the lows right there, and then we went back up in 2011 and then 2012, and then it just kind of leveled off and didn't do anything for about 10 years, I would say, because we can see gold took a nosedive, I would say about the end to beginning of 2013, and didn't really do anything, I would say, until about 2019. So not exactly 10 years, but approaching it. And we can see ever since then, gold has continued to go up in value. We can see these prices, right, 1,635.90 was actually very close to what we were at back in 2012. So that's about a 10-year span, really not doing too much. But recently, gold has taken off like a rocket. So it's a good thing to keep in mind. Now, these are all the main indices that I like to keep on deck here, which is the Dow Jones, S&P 500, and of course VU, which is the S&P 500 ETF, and then NASDAQ. But we can notice every single one has been in the negative. We can look at year to date for all of the indices, right? Dow Jones, we're negative on the year. We can look at the S&P 500, we're negative. Of course, the ETF, we're negative as well. And then the NASDAQ, which is actually the most extreme one at negative 17.92%. And remember from the VIX that I was telling you about, it's actually a good time to be buying because we can see that these spikes don't happen that often. We had a small spike back in August, but nothing significant as now. And if we look at the 5-year, we can see the fear has hit the market in certain areas. And if we want to look at all, we can see all of those spikes. Obviously, Bitcoin has not done great this year. It's down negative 7.57%, but gold has outshined everything. And the other thing to keep in mind too is you want to just keep track of all of these indices because it gives you a good idea of where the general market is going. You can look at crude oil. It's also down negative 13.31%. That's another good thing to keep in mind because we want to make sure that our gas prices are not too high, and that's really what crude oil is going to be measured as. And then of course the Russell 2000 is negative as well, similar to the NASDAQ. Hope this video helped you out. Let me know if you have any more questions or want to discuss any better performing ETFs in this downturn. As always, please like, subscribe, and I'll see you in the next video.